opportunity. But we don't try and have any view about what the fundamental value of Bitcoin is, and that's a long debate whether it exists at all. But we just trade it based on price performance, and there's opportunity. There's not that much liquidity in it, so it's a tiny position, but it's, we like anything we can trade. The more different things we can trade, the better it is for us.
Are you using futures? Are you trading Bitcoin itself?
Yeah, no, we're only trading futures. Basically, the settlement risk you take on the so-called exchanges is really not the sort of thing our clients are looking for us to take.
And is there a rapid institutional adoption? Are people just kind of open-minded about it? How does it sit right now?
I think you would call it a very, very slow adoption. The reality is it's a futures contract. We trade hundreds of futures contracts around the world. People will look at it and try and do things with it, but we don't get asked about it by clients, our institutional clients. I mean, we have pension funds around the world as clients, and honestly, they never ask about Bitcoin.
You're doing it for a reason, though. Is it on the premise that the premise has always been for Bitcoin bulls that institutions will eventually come in, charters for pension funds, et cetera, will be able to then invest in Bitcoin and cryptocurrencies, and there will be a flood of money. Are you a buyer of that premise or no?
No, I mean, we're doing it because it's diversifying. We trade as many different things for as much diversification as we can get. We trade 10,000 stocks and 600 different markets, and Bitcoin clearly doesn't trade in line with anything else. That makes it diversifying, so it's fun to trade. That's it.
Just given where you said, I wonder if you have a view on a separate area that's gotten so much attention, which is the sort of volatility trading arena. So obviously we had this kind of crescendo of activity, this blow up in the short vol funds. As a strategy, is it alive and well, or is it less active than it had been?
It's definitely less active than it had been. I think the reality is because of the size of those structured products, the front contract and the second contract on the VIX futures have been basically a false market for a reasonably long time. So we trade.
So those exchange-traded notes were kind of wagging the dog.
Yeah, exactly. They were completely wagging the dog, and so we trade the third contract out, and that's been a profitable exercise. It was profitable in February. Volatility trading is an interesting opportunity, but you always have to be careful to look at an instrument and make sure it's trading for sensible reasons rather than because one particular thing is driving it.
What's your take on what is behind this volatility?
So the most important thing he said that obviously would bother me and worry me, but I think he's incorrect, and obviously let me know your opinions, your comments on this. He doesn't see the ETFs coming. He made it kind of clear that institutions do not care about cryptocurrency, and only reason you have it, it's just a different asset class that's not supposed to be correlated to markets, and basically it's just an easy way to make money off volatility because it's a volatile asset, and he doesn't see any institutions owning the actual coins themselves, just trading the futures contracts. So I hope he's wrong, because that is kind of where our Bitcoin Jesus is really coming from, or at least my opinion. I think a lot more money will come into the market if actually institutions are able to create stuff like ETFs, where people then can, if they're not going to own the currency themselves, they'll set up the custodianship, and then they'll be able to technically own it through that ETN or ETF. So I really hope he's wrong. He does seem kind of like a cryptocurrency troll, and I would say never, but in a way, I don't mind sharing his content because it's a little humbling to realize that people like himself who have plenty of experience are obviously to the contrary. So it may not come this year. I'm really hoping that we do have the custodianship and the ETFs sometime this year, but it might take a little longer. And what he's saying is that they're not even interested, his institutional clients. So let me know what you guys think. I definitely pay attention to news like this because I know we have like a little bit of a bull market right now and everyone's super excited, but if I don't see signs of an actual government regulation that shows that big institutions can start to actually, not just the futures market, but actually buy or go through a custodian, if that's not happening, I would be very careful. I would basically still keep most of my money in fiat to continue to buy dips until that's set up. So this guy doesn't believe in it, but he could be completely wrong. Let me know your thoughts. I think it's really interesting, and I will talk to you guys soon.